we've been looking forward to this with relish. So what I'm going to do, I'm going to hand over to Alastair. What we're going to say on this is we're going to reserve questions to the end. Okay. So if there's anything you want to ask, just either put it in the chat or put your hand up right at the end, and we'll go through questions towards the end. But I'm sure this is going to raise some great topics. All right, over to you, Alastair.
Okay, thank you. Good day to everyone. Yes, there may be some controversy. Maybe you get some arguments going later. There's a headline in today's FT saying economists are facing a recession, which was a bit of a dampener for me. So perhaps I might pass the hat round after we finished this morning. Anyway, my bag is trying to make sense of things, and I ask your indulgence if I oversimplify. My kids say I talk in riddles, but I'm going to talk in threes, not in the classic Aristotelian sense, but just to keep things moving along. So I'm going to talk about financial markets, macroeconomics, and geopolitics, and I'm going to come up with 3 propositions in each of those topics, and I'm going to do global first and then some UK, as I think you're mainly a UK audience. So you're going to get, lucky old you, 18 propositions, but I shall end with 5 predictions, which will be mainly about the UK. So we'll start with global financial markets. Now, I think most of you will know that's nearly, but not quite the same as US markets. That's where the drivers come from within and come out of the US. The US is the overwhelming source and destination of investment portfolios. So my first proposition is the number one focus in global financial markets is artificial intelligence, which is in a bubble. There is a growing, but not universal consensus that it is in a bubble. I'm with the growing consensus. But there isn't a consensus about how far and when it might burst. Current and projected growth in top-line sales and earnings is the big attraction, while enormous CapEx expenditure and the depreciation that will arise from that is the main worry. I think it'll only be resolved once the numbers come in or investors actually lose patience. I'm not sure I don't think that'll happen in 2026, although there will be some moments. I don't know if you're familiar with the FOMO expression, fear of missing out. It's very hard to avoid getting caught up in that. And there's another expression, buy the dip, which has been every time shares, especially of the tech, the AI companies, fall, you pile in, and they go up, and that's been very successful. So my view is there's going to be volatility, but Wall Street is very bullish about 2026. Remember, Wall Street is in the business of selling stocks, but they're very bullish. So I might go along with bullishly volatile. My second proposition is, oh, by the way, I do have some notes. And so if you see my eyes furtively moving, that's what I'm up to. My second proposition is diversification of risk away from big tech. I'm tending to use big tech and AI interchangeably, but they're not the same. But it's where the money and AI is in big tech. And there's a diversification from big tech and US generally. Now, once the idea of this diversification really came onto the radar in earnest it's always diversification, but about away from the US, the American exceptionalism really started in last quarter, sort of November. And of course, once the idea of a bubble, it's quite an insidious thing. It's quite hard to imagine a gentle deflation. So, and I'm hearing that some global investors are actually selling the Mag 7, the big tech stocks. Most are pretty wary about them. They're hugely inflated valuations. And they're looking to diversify. Now, within the US, there are smaller tech companies. There are non-tech beneficiaries of the AI boom, like builders, people building power stations, data centers. There are often cheap stocks in just about anything. Bonds are still offering a decent yield. And of course, outside the US, there's foreign tech, particularly in Korea. There's Taiwan, but those, and of course in Hong Kong, the Chinese companies. So there's value, a lot of value still in elsewhere in the world. Now, gold and silver have emerged. I don't want to dwell on them, but silver is the star of 25, even overtaking gold, as an investment, not just as sort of hedge. Base metals, copper has gone through the roof. I think that's probably linked to any building boom, but of course, not oil is not done well and is unlikely to do well. There really was quite a lot of choice also in November. People were talking about an everything market. It was a great opportunity to get in. Anyway, so that's that second proposition. Now, my third proposition is the dollar will stay down but not out. Now, you have to bear with me on this. One of the most effective ways of protecting your assets, and fund managers have to have global fund managers, they talk about the tyranny of the benchmark indices. And that really means if you're a global portfolio manager, you've got to be heavily invested in the US, in dollar assets, whether you like it or not. And the more global you are, and the bigger your fund, the more you're subject to this tyranny. So shorting the dollar, selling dollars you don't have is the way to hedge here. And this is what happened in scale early in 25, but it is expensive. And because it paid, people took profits, and still do when the dollar dips, so that the short comes in. Now, the result of that is my proposition, that the dollar stays in a range. So it sort of got this shorting going on on a large scale, but it won't collapse. It is at its lowest level. It's been running there. It's been pretty flat for the last few months, and it's actually, by the way, having quite a good run, but very, very minor this week. It's at its lowest level since 1922. So that's my third. So we're going to move on to global economics, and my fourth proposition is global growth is flattening, and there is no obvious positive catalyst. Now, growth has been is slow at the moment. Global growth. I mean, I try to avoid too many figures. I mean, it's running just over 3%, which is low by the standards of the last 80 years. I mean, the big stories in the last 80, obviously the post-war World War II recovery, and then China entering the global economy, which started in the 80s, took off in the 80s. Now, if I'm sounding gloomy, we're not talking about collapse, but to go back to some good old days or good recent days. We need a new China. China itself isn't going to help. India is a good story. It's growing, but it's quite a bit of it's already in the numbers, if you like, in the global economy. You know, the the obvious place to look, whether population growth, resources, chance to, for consumers is Africa. But I don't know how governance is not a strong feature of African countries, and I'm not sure. It must get better at some stage. Now, people say, but of course AI is going to change everything. Well, maybe. It's certainly going to make things, a lot of clerical work, more productive. Productivity will go. I suspect that means quite a lot of unemployment as well. I mean, I think the transformative role of AI may not even be economic. I mean, ultimately everything is economic, but it's in climate, managing climate change, of course, health, longevity, and even tackling poverty solutions. So advanced economies are, the advanced economies are 1 to 1.5%. The US has had a strong last quarter. You've probably seen some headlines. It's probably about 2% now. So at the top of the thing. I did say the China model is bust. It's, there's a limit to how much you can rely on exports and capital, infrastructure investment. And you need consumption, but everyone, because of the housing, the real estate market, people just don't consume. Consumers don't have the money, and there's also a lot of unemployment in China too, which of course they don't talk about. Where the growth will be is in Eastern Europe, not all of Eastern Europe, Latin America having a bit of a revival, and parts of if you know what ASEAN, the ASEAN countries, which not Thailand, which is probably the best, but Indonesia, Malaysia, and of course Singapore. So that's the fourth one, flattening global growth. We're going on to number 5 now. Interest rates will not fall much. I'm talking globally here because of government borrowing, everywhere, and possibly sticky inflation. When there's some lack of, slowing growth, it does put pressure under public finances because there's an infinite demand for public services. The US have got tax cuts, if you please, which has pushed up borrowing requirements. And there are real downsides about public borrowing because it crowds out private sector investment. It inhibits expansion, and it does keep rates higher for everyone else, including consumers. This is the technical term for this is called fiscal dominance. That basically government borrowing is running the economy. I think it's going to get worse. Now, inflation is very interesting. It could be sticky, even if demand. I want to share cost push is inflation is very much there. Corporate margins, they call it greedflation in the US, where companies basically push up their prices. And of course, they've been doing that and still doing that with the tariffs. And tariffs themselves, although it's a one-off, well, it would be one-off if that's all Trump did, but he does keep fiddling. Now, in US, we have a different sort of cost push because we have public services are a bigger deal in Europe and the UK. We've got union wage pressures and wages have been rising very well in the UK average earnings. Even wages are also rising in the private sector because when you've got, this is again in the US, when you've got the better off they like experiences. They like to go for dinner. They like holidays. They like gyms. They like all that, and that it's labor intensive. So there's a demand for that, and that can put cost push. But with the slowing demand pull inflation is less of a force. So all the and there's making this cost push stuff is making and the government borrowing a floor for interest rates. The floor is lower than we are now, and we'll come on to that in the UK, but it's probably 3% in the US. So that's number 5. Number 6 proposition: more protectionism in trade, and there'll be trade regulatory disputes. There's an ugly spat between the US, Trump, and the European Union on the regulating the social media. Now, this is where Trump does appear more in the conversation. His tariffs, now this colonization, his conquests, and the absolutely astonishing grifting for his family and billionaire friends is very negative. However, even worse than that is China desperately dumping its surplus production, which is really forcing other countries around the world, and rich and poor, to protect their own vital industries. And so this is, I don't know if any of you have heard of David Ricardo, the long-dead economist who first described the phenomenon of comparative advantage. He will be turning in his grave because comparative advantage is not working as it has in recent decades. So we're going to see partial deals like the EU and Mercosur, which is quite interesting. It's only taken 30 years to get to the stage it has. And you'll have these bilateral deals where, the UK government are very proud of the one they have with India, which, it's better than nothing, but it's all piecemeal. I think more interesting is what's happening, the EU and the wider, the EEA, which includes Norway and Switzerland, and Iceland, to be correct, and Liechtenstein. There's quite a lot going on with Canada, and that's very. Canada, of course, is desperately trying to make new friends or new trading partners. And I think the EU itself, in response to Mr. Trump and other things, it's becoming more important, more attractive for the UA, and also it's an interesting group of countries in Central Asia and actually the ASEAN countries too. Now these negative trade trends, I think, will continue during 26, and I don't think. I think a lot of the damage will survive Trump. I don't think even when he eventually quits the scene, it's not going to go back. It's a negative. So let's do global politics. So obviously you've got to see global politics in this context of an economic dampener. The cake is not getting that much bigger. Not all the boats are rising. And this is putting leaders under pressure. Now, I want the 7th one, if that's the context. 7th proposition is Trumpism is only about Trump and will not outlast him. Now, I'm aware I may offend people here, but it's a very sincere belief. The press treat Trump as a normal politician, and he's not. He's a sociopath. Sociopathy is a clinical psychiatric condition. It is the opposite of empathy, sociability, moral compass, and it involves a disregard of rules and laws and indifference to causing harm, including to oneself. And I think the best way now to see, and I'm not being particularly original here, as a badly behaved participant in reality TV, I think where he made his name in The Apprentice and then in wrestling, wrestling and in the Apprentice, and he's a star. I mean, he excels at that, and he's center stage, and everyone else gets shut out. What we're now seeing is the courts in the US are starting to restrain him. Some foreign leaders, Carney, Lula in Brazil, the redoubtable Mette Frederiksen in Denmark, and Donald Tusk in Poland are standing up. Not, it seems, secure, or not much anyway, or maybe quietly. And even this week, we're seeing Republican rebels voting against him and risking, he's already calling for them to be dismissed and defeated when they stand for re-election or to be deselected. I think a lot of the Republicans in marginal situations are wondering when to break with Trump, because affordability is what's killing him, this word affordability. And it seems, I mean, you can almost see how the midterm elections in November are going to go. And it's the build-up to that, how it's going to affect how votes are, the positions Republicans in particular have to take in various elections. But it's housing, medical expenses are a shocker, food, and of course imported goods because of the tariffs. So this is really going to really do for Trump. But of course he is still here, still there, and has got a great scope for doing more damage. Now, my eighth proposition is this economic thing is authoritarian regimes are in big trouble. They really are. Now, the press, again, annoy me. They seem to like, although they dislike, and they seem to admire and glorify these strong men. But affordability is really a big challenge for them because they have central planning, they have corruption and complete indifference by the elite to the ordinary people. And eventually, I don't know, worms turn. You're seeing in the papers now what's going on in Iran. Most is very visible, but there's a lot of unrest. It's not widely reported in China. And I think there is actually a change in leadership. That is itself quite a controversial thing. Russia is a time bomb, and their problems even more are going to get when the war effort, the war economy starts winding down. And there's trouble for would-be authoritarians. Erdogan in Turkey, Orban is facing electoral defeat in Hungary, and so on. So that's eighth. Ninth, democracies will struggle. I'd better speed up, hadn't I? Democracies will struggle, but remember, they are best placed to come up with solutions. And there's two reasons for that. Mainly, one is they have money. Democracies tend to be richer countries, and they've got money to sort of decide how to deal with some of these things. Democracies, it may not look like it now, but it's about consensus. People are looking for consensus. And for instance, you can see how somebody like Giorgia Meloni is working pragmatically, supposed to be right-wing, makes lots of right-wing noises, but actually isn't particularly right-wing. The French are moving that way, the Rassemblement National, as Marine Le Pen seems to be being pushed sideways. The Germans, AfD, are beyond the pale. They're really going to have to change their tune. So let's go straight into UK politics. And I can, but my 10th proposition, Labour is paying the price for their lack of ambition and poor messaging. They're a terrible mistake. They seem to have killed off hope. Now, I say my friends who have never vote Labour in their lives tell me, go on about freebies. Totally trivial. The real problem, the glasses and the suits. The problem is Starmer is not a politician, clever man and so on, but he just doesn't seem to be. And being a politician, we read about them, but the great thing about politicians is they're trying to sort things, democratic politicians. And we've got Reeves, who's a paradox for me. She says she knows all about how to fix the economy and then doesn't know how to do it, apparently, caves in the slightest opportunity. I don't know what this Rachel in accounts expression, for me, it means she's just penny wise. She's not thinking strategically. To be fair, my 11th proposition is and again, I'm not being rigid, I don't think UK governance is fit for purpose. It's a big topic and I can't really do justice, but it's too centralised. There's not enough prioritization and strategy, and delivery is hopeless. And this goes beyond incompetence. It's structural. There are plenty of incompetent ministers and civil servants, but it's structural. I don't think privatization has worked, the great Thatcher reforms. The best hope is there's more devolution to English mayors. I'm sure it's not perfect, if any of you are in Manchester and Liverpool, but there seems to be progress there. There seems to be some progress there. So it's all about short-term fighting on the news, and there's this confrontation. Don't know about you, I long stopped listening to Radio 4. I used to appear occasionally on Radio 4, the Today programme. It's so adversarial, Punch and Judy stuff. And I mean, I don't know about you, I won't watch Prime Minister's Question Times. It's frankly embarrassing. So we're going on to the 12th one. This discontent we're facing a period of minority governments, I think, in the UK. Obviously not yet. But things are not working. We know that. Our kids are worried about housing, things. Even the better off people are finding the good times or expensive holidays and so on. And this discontent, I don't know about you, I reckon that's why it was present really in 2010. That's why people voted the Tories back as far as then. The Osborne austerity made it worse, opened the door, gave Labour a chance in 2017 when May lost her majority. And then, of course, the Tories come back in 2019, and I think that's why Labour won in 2024. Discontent, change. I can't see coalitions, but, I mean, the parties are going to have to be very careful. One of my daughters-in-law is Dutch and is a great advocate of coalition government, and it's worked there. I don't think that's going to happen overnight here, but I do think there'll have to be a lot of consensus, and I think, in a way, people have to get on with things, as the government will be very constrained. I mean, I think if Reform get the most seats and get the chance to form a government, I don't think anyone will go to coalition. The Tories may provide some support. I suspect Labour are more likely to be the largest party, and they will get very hard support, line from Lib Dems and Greens. It's all going to be so it'll be unstable, but it may provide solutions, I don't know, to consensus. Quickly, UK economics, it's fashionable to knock the UK economy, but we do have to remember it's the 6th largest economy in the world. It's 20th in capital GDP per capita, which is similar to France and Germany. And it's okay, it's less than, it's 2/3 of what it is in the US. So my 13th proposition that is actually quite optimistic. I think there's upside in the UK economy due to both public and private investment. There's a lot underway, and I think private sector is investing, even if it's not hiring a lot of people. I think Labour have the worst damage is probably to employers is probably over to companies. You know, the latest sort of reining back of the Employment Rights Act. And it very important, the technical changes recognizing government assets in the sort of government balance sheet, public borrowing, which allows uh, loans, you know, capital loans through the National Wealth Fund, the Research and Innovation Institute, and things like funding in the green investment. I mean, I would say the government, for all the apparent loss of lack of message, are looking for ways to help, and one could be cynical about that. But there are a lot of bright ideas going on in the public services and supporting industry. I think Europe's the most interesting one. There's obviously this creeping back um, uh, into trying to be friends, but we're not going to be friends, have the same on financial services. Um, I find this debate, I mean, you may be cynical. I think it's quite good. The politicians are testing the water. Are we really willing to forget to go back on some of this? Northern Europe, by the way, very keen, but I spend a lot of time in Italy. The Italians aren't remotely interested in, and the Spanish and the UK, not fussed about it. My 14th, oh dear, I'm sorry. Am I all right for time, Ollie?
We're getting to the point now, Alistair, where
Okay,
we start looking at some questions.
okay,
And
well,
we've got a very interesting question that's been posed by Mark in the chat. I'm going to hand it over to Mark, if I may.
yep.
Alistair, if you can have a look. If you want to raise that, Mark, with Alistair, by all means.
Yeah, sure. Thanks, Ollie. Thanks, Alastair. Really interesting. So my question is around what are your thoughts and predictions for public investment into innovative companies in the 2026 and beyond, primarily in the UK? So looking at funding bodies like UKRI, Innovate UK,
Yes,
NIHR, and then
yeah,
also in Europe and the wider markets.
yes. I'm glad you said that. I think it's actually a positive mark. I think it's going to get better. Um, what is what's disappointing is they didn't make more of this when they got elected, and I don't know if they knew quite what to. I mean, this was Rachel Reeves. I mean, I was working with people who were advising her, and she said, "I know everything," and she didn't do it. But they are doing it. I would be quite optimistic. I don't know if any of you, I don't have any first-hand experience, but anyone listening is trying to get money out of the government or local authorities or whatever. I would be optimistic. I really
So
would.
what kind of signals or signs lead you to think that?
Well, it's. I mean, at this stage, I'm seeing the institutional, the whole this national wealth fund. I'd look into look at their website, see what they're saying about themselves. You know, is it bullshit? Maybe. It looks quite impressive to me. And actually, I know some of the people there, and I mean, these are good guys and ladies. They're good guys. Uh, um, and also there's the innovation. What's it called? The Institute of. It's got a name. Uh, what? Uh, That's Research and Innovation, UKRI.
Oh, UKRI, yeah, I know
Yes,
them very
yes,
well. I
yeah,
used to work
yes.
there.
Yeah, okay. Well, you tell us, Mark.
Well, I
Are
think
you
it's positive.
optimistic? Are you
I
optimistic?
um I mean they've confirmed the budgets for this year, and there's no decrease in funding, and I know that many of the delivery partners for Innovate UK within getting towards the end of Q1 are going to have substantial human resource cuts, so up to 30% in different departments. So what I think that does mean effectively is there's going to be slightly more cash in some areas. Exactly where that's deployed yet, I'm not sure, but it seems to me quite positive for certain sectors and certain industries. It is my view, particularly when they relaunched they have like the IS8, they call it, so the 8 kind of industrial sectors. So that's why I asked around specifically those innovations. I think the risk is the gap from kind of idea to something maybe is going to get harder unless you're in certain fields and certain spaces. And I was also wondering what your thoughts are on the other side of the coin, which is private investment. So looking at, angels, VCs, private equity funds. I have an opinion, but it'd be good to hear if you got any views on that as well.
Yes. Well, yes. I don't know. I think the public market's going to perk up. I think there's going to be a gravitational pull. I mean, that was one of my things is UK equities still offer value, and I see an upward pull from the FTSE 100 has done okay. I think dividend yields are very good. I think foreign money. I mean, it seems foreigners have been keener than UK institutions in investing in UK companies. But I now see this. Remember, I was talking earlier diversification, and I think the UK will be a beneficiary of that. Now, maybe it's wishful thinking, but I think it'll become a talk to a lot of stockbrokers. Obviously, they're talking their own book, but I think there will be more capital raising. But there is a lot of money, Mark. There is a lot of money in the UK. I mean, it's a rich country.
Yeah,
and the money's got to go there, and it's not going to go as much to the US as it did.
Yeah, I do hope that the government utilize the opportunity to invest funds in certain areas, because I think my personal view, I'm not an economist by any stretch, but I think there's a lot of signs to point that we are going into like very high unemployment, like comparatively to where we have been over the last 5 or 10 years, at least in some industries. At least that's what I see in tech, right? I see a lot of layoffs. I see a lot of consolidation. I see a lot of operational efficiency, primarily driven by AI. So I think there's going to be a lot of people who are kind of laggards in certain industries. And in my personal opinion, the governments and the people in power are already holding off on that, that transition. I mean, if you go to San Francisco, there's driverless cars everywhere. So the technology exists. I think the biggest risk is like, where does the government kind of put the money to keep the flywheel turning? Because I think the flywheel is going to start stopping in certain places.
Yes, I think you're right. Yes,
Alastair, Mark makes a very good point. I read an article before Christmas about this, that unemployment is rising and will rise to a point where there could be some deflationary things going on this year. And this article suggested, and it was by an eminent economist, that interest rates could drop as low as 2.5% towards the end
I saw that as well.
Because of unemployment. And I'm wondering if interest rates are artificially higher at the moment than they need to be. And that's something that Trump has been talking a lot with the Federal Reserve in the US about, that, rates need to come down. They need to come down faster to respond to things. Now, just before Christmas, we had the managing director of the British Business Bank in, Warren Rawls. He did a fantastic talk, and he was talking a lot about grants and the grant landscape for 26 and a lot of the initiatives. But I do think I do believe that this current government, although they got elected on a mandate of growth, growth, growth over everything else, they tend to miss out on certain things that are obvious to others. Maybe with more of a business background and bent, if you like.
Yes. Well, thanks, Ollie. I mean, that's what I think. I think there's a lot of good intentions and there are a lot of good ideas. I think delivery is the problem.
Yeah.
Right? And maybe it's not very comforting, but I think people are just going to get on with it. I think it's interesting that Mark is saying he's already seeing AI. I think unemployment, I don't think it's going to go through the roof. And on interest rates, actually, my 17th proposition was interest rates cuts will be limited. It's the same as I mentioned earlier. Globally, it's government borrowing is going to keep gilt yields up, and there are a lot of frightened rabbits on the BO and the Bank of England, the MPC. There are 4 of them who are not going to vote for rate cuts. I mean, it was 5-4 last time, and it's going to be the same battle, the next few meetings. I would say 3% is the floor. That's one of my predictions. 3%. I think it won't get there till later in the year, second half. But that will bring down mortgage rates. But it's not going to. Then I don't believe that. I mean, I think Trump. Don't tell me what Trump thinks. I mean, he's mad. He's a sociopath. And they ain't going there in the States either. Whoever he appoints as head of the Fed. I just like to say, because I'm currency, I spend a lot of time in currency. One of my propositions is the pound will be supported by the euro. And if you remember, I was saying the dollar would be under pressure, but the euro, it's actually hilarious. Increasingly global investors see Europe, the UK, as part of Europe, even though it's not. And they tend to lump together, the pound, the various krona with the euro. And the euro is not the dollar. So if you're shorting the dollar, you buy the euro. And vicariously, the European currencies, including the pound, gain from that. But of course, the pound will. There are interest rate cuts. They're not coming in Europe, so the pound will perhaps soften a bit on versus the euro, but it'll sort of hold up against the dollar. So there you are. But I'm not. It's not a great story, but I think things are happening, and I think people are going to get on with things. Businesses will get on. Okay, they're not hiring, but now they're looking at ways of, smartening up their operations. I think government are increasingly looking at prevention rather than cure in some of the, in health services. I think they're starting to think about that properly in immigration, although that's itself shouldn't be an issue at all. They're looking at that in crime, which is a big issue. It's how to prevent, and that's going to make a difference. So there are. I wouldn't be despairing. I just think it's, the global situation is flat. It's very difficult to do anything in the UK. We have a dysfunctional governance in the UK, which is holding us back. But we have a lot of money in the UK, and we have a lot of clever people. And I imagine sitting listening to this. And I was going to say I was talking in threes. I would just say you've got your product. Don't forget, you've got your own threes, your product, your marketing, and don't forget your cash flow. I think that's if you manage that, things will go better for you. I sincerely hope so. Is that too? Am I sounding manically
No,
optimistic?
Alistair, that has been fantastic. Are there any more questions from anyone? I think we've exhausted all the questions. No, I would love, Alistair, to welcome you back later this year.
Yeah.
To track how some of your predictions now of where we are with them and how they've actualized, and that would be a great exercise. So you're welcome back anytime. You're going to get a lot of love and big ups on LinkedIn over the next few days. I know you're on LinkedIn, and we're going to thank you for coming on and being our first guest speaker of 26. I think it's been a tremendous session, and I would love to have you back on later this year to look at what we've said this morning and where we are.
Okay.
Because,
and
that'd be great.
Thanks very much. It's been great fun.
Lee, just a quick one. Mark Taylor asked if he could have a copy of the Warren Rules video that from British Business Bank before Christmas. If you could send that to Mark, and also send it out to anyone else in the community, because that was a fantastic talk.
I tell you what,
right?
Ollie, I will send a list of my 18 propositions, and I won't hold up things now, but I have made 5 predictions, which you can hold me to later in the year. I'll send that to Lee or you or both of you.
Send it to both of us, please.
Yes,
Alistair,
and you can distribute
great.
it or not as you wish. I mean, if by all means you're doing this recording as well, that's fine. Up to you, mate.
That is wonderful. Send us the 5 predictions, and then we can track back later this year. That would be very useful. All right.
Okay. All right.
Well,
thank you very much, Alistair.
Appreciate that, Alistair.
All the best.
Have a great weekend, all, and see you next week.